of what your expectations are and what you're looking to do, and how, of course, we can still help you further. And of course, that applies to everyone joining us today, but those 6% of you, I'd really like to hear from you about what your expectations are and why you wouldn't have been happy with your trading results. All right, so we've gone through the basic radioactive setup. We've discussed the possibility of using an income method. We've talked about sort of what's different now, of entering a limited risk position and having an unlimited upside profit potential. That's the foundations of radioactive trading. That's where we start, and then we use the income methods to cancel that risk and protect our positions, limit the losses. Art just asked a good question. He's kind of forcing me into where I want to go now because I made a promise and I really want to get into it. But Art wants to know, is 6% max loss a good guide for original setup? Absolutely, Art. I think it is. And for what we want to address now, what we really want to get into now, is for those of you who are self-directed, or for those of you who have your own trading style, for Art who wants to find positions that have less than 6% at risk, how do we do that? How do we apply this method we've just been discussing, everything I've given away for free here today about limiting your risk with that initial setup, keeping your risks and your losses below 9-8%, for example, and then applying the income methods? How are we going to be able to do that in the real market? Well, to do that, let's navigate over to the PowerOptions suite of tools. And hold on one second here. Let's just slide this over and open that up to full screen. All right, now I apologize for some of the jumpiness that you might be seeing. Just got a new computer with a dual screen setup, and I'm still getting familiar with it. For self-directed options investors, a lot of investors who have purchased the blueprint, what we're going to use is the PowerOptions suite of tools to, number one, find RPMs that match our personal risk threshold. There's a variety of ways that you can do RPMs on ETFs. You can do them on dividend-paying stocks. You can do them on the stocks that you normally trade. If you use fundamental or technical criteria, you can set up these limited risk positions on those the normal way you trade right now, and then be able to take advantage of the 10 different income methods. How are we going to do that? Well, when we log on to PowerOptions, as we talked earlier, PowerOptions is a suite of tools that supports over 23 different strategies. We're going to access the Married Put tab. Now, this is a unique form of Married Put that we use to enter our positions, but we still have the availability to do that. Long stock plus long put. Kurt refers it to an RPM as radioactive profit machine, but basically still a Married Put setup. So from the Married Put menu, one of the available strategies, we're going to go ahead and access the search tool. The search tool allows us to scan the entire universe of options to find only those positions that match our personal risk-reward tolerance. When I first run this search, what is pulled up for me, you can see it here down at the bottom. We're looking at the default radioactive screen. This is the general starting point that Kurt uses to identify his RPMs. Now, taking the first result, the system went out, scanned the entire universe of options, and it found these positions that matched this criteria. Well, let's just take the first one. We're looking at Precision Cast Parts Corp., stock symbol PCP. It's kind of strange, but the last stock price is $123.98, currently trading at $123.98. We're shown that we can buy a January 145 put option in the money, far out in time, for $24.90. Now, it's pretty expensive, doesn't it? No? It makes our total net debit $148.88, but since we have the 145 put, we're only risking $3.88 or 2.6% of our initial investment. Now, this is just a description of what's shown on the PowerOptions tools. What we want to get into is, how are these results identified? And can you identify your own results? Absolutely. Now, one of the things I had mentioned early on is that Precision Cast Parts at $123, and the option ask is almost $25. That looks a little bit expensive. I'll be honest with you. With my trading account, I'm usually not buying stocks that are higher than $35, $40 per share. So to buy a put option at $25, that's a little bit out of my range. But that's perfectly fine. What we want to do is scroll down below the listed trades, and we can take a look at the default selection that's set up. The system, this default search that Kurt uses as a stepping stone or as a starting point, is looking for all put options that are all months out in time, at least 150 days to 900 days out in time. So we have to be at least 5 months out in time. we're not allowing the put option to be more than 20% in the money. We limited this range in or out of the money. Why? When the blueprint, Kurt discusses that there is such a thing as taking on too little risk. If I'm looking at a $50 stock, I know that I can go out and potentially buy a 100 strike put. It's 100% in the money. It's 50 points above the stock price, and I'm going to have to pay $50 and maybe 10 cents because it's so deep in the money, it's all intrinsic value. So I've got a 100 strike put. I've got $100.10 invested in the position. I've got a risk of about 0.1%. That's fantastic, isn't it? Well, not really. When I enter into a position like that that's too deep in the money, my expectancy for profit is extremely low. I need the stock to move up significantly, almost close to $100, even though I'm only risking 10 cents, to be able to correctly apply the income methods and make adjustments without adding more risk. That's the key. You want to make these adjustments correctly after you get into a position. But let's go back and discuss a little bit more about how to do that. Now, the maximum risk range, you might ask, we're looking for a limitation here between 2.5 and 9%. You might ask, why limit the lower range to only 2.5%? That goes back to what we were just discussing. Okay, I have my risk limited to be no less than 2.5% because I don't want to be too deep in the money. I don't want to take on too little of a risk. Art, you prompted the question earlier on, is 6% a good target? I think it is. My personal risk threshold for an RPM is that I'm not going to take greater than a 7% at risk. So I'll just click into that field and change that to less than 9% to be less than 7%. Over here on the right, Kurt uses a stock range between $9 and $200. I've already expressed how that's way outside of my personal range. So I'm just going to make an adjustment here, and I'm only going to look for stocks, actually I'll trade the lower range too. I'm going to look for stocks between $5 and $45 per share. Now, as I scroll down a little bit further, I will tell you that here in the recommended list section, we have selected IBD 100 and canceling. This is the stock list that Kurt prefers to use. But if I have my own method of trading, if I prefer to look for stocks that have a certain earnings per share growth, price per earnings, maybe a certain RSI, for example, I can change this and select no lists and then just plug those filters into the screen. And just for a basic example, I'll put in that earnings per share growth of at least 7%. Let's say I want a broker recommendation of at least less than 2.6%. I want to look for stocks that pay a dividend of at least 2%. Kurt uses an average stock volume as a default of at least 300,000 shares per day. My personal preference might be around 750,000 shares per day. This filter is using the, is measured in thousands, so I'm just going to plug that in. And if I wanted to use other filters such as the RSI or Bollinger Bands, shares outstanding, for example, percent of 52-week range, well, you could just plug those values in as well. So what have I done here? Well, I've taken the basic setup, but I've decided to look across the entire universe of options rather than a limited stock list. But I'm using certain filters such as earnings per share, and you know what? I'm going to put in a price to earnings between 0 to 50 as well. But you can customize this any way you want to. As a general rule, going back to Art's question, what I've seen is that Kurt's RPMs typically range in risk from about 4% to about 8% when he originally opens them. So Art, is 6% a good target? Yeah, I mean that falls almost right in the middle of where Kurt's selection is. I myself find that I'm usually entering positions between about a 4.5% to a 7% risk. I just opened one that we're going to look at in a little bit where my maximum risk was 7%. By the way, if you wanted to look just for married puts on ETFs, you could do that as well. From the stock list, I could just select to screen against indexes, ETFs, and holders. Or if I wanted to leverage ETFs or inverse ETFs, if I'm actually bearish, I can look for RPMs on inverse ETFs and apply the 10 income methods that way. So as the market's dropping in price, my inverse ETFs are moving up in price. So however you like to trade, you can customize this search screen to identify just those positions that match what you want. All right, so let's submit our settings. We've gone ahead and made my changes based on what I want to see. Go ahead and hit submit, and now we'll get a list of our positions that match that criteria. Now, You see some common names in here. I do sometimes refer to these search criteria that I use from time to time as the water cooler stocks. I've got things here such as Bristol Myers Squibb, Kraft Foods. Those of you that have listened to me on various webinars know that I'm in a Kraft position right now that I opened in December. I have the put out to January